How's it going, traders? It's Bubba Wall Street back with another weekend review. Today we're going to go over the top indices and sectors going into next week. Make sure to hit the like and subscribe button below so you can get these actionable charts as soon as they come out. Feel free to leave a comment down below. Let me know what you think about these chart videos. And feel free also to watch these on 1.5 speed if you feel like I'm talking too low. And of course, please keep in mind, this is not financial advice. This is merely for entertainment purposes. So let's dig into the charts. So we're going to work off the monthly charts. Today is May 1st. We just finished the month of April. And you can see on SPY here, not a very friendly month. This channel goes way back, I believe, to about 2008. And you could see right at around mid last year, we started to break above that channel. We came into a 4236 retracement, extension, Fibonacci extension off of the 2008 high low move. And you could see we did break out here late last year and then bearish engulfing month. And that sent us right back down now at the 21 EMA on the monthly chart. So when you take the extension, the retracement from this swing high, which was the all-time highs, to that swing low there, you've got that 382 retracement right at the COVID low anchored VWAP, right at around 380. Just looking at some other lower time frame analysis, it does look like we're possibly going to come down to 400, as low as 380 possibly over the next couple of weeks. April traditionally is a very good month for the market, going back, I think, historically over the last 20 some odd years. And this month obviously just bucked the trend. I think it was one of the weakest Aprils on record in the last 40 years, I believe. So yeah, I think, the market's certainly pulling back. There's no bones about that right now. And we'll just have to keep an eye on these sectors and see where we're at, come May. So next one we're going to talk about is QQQ. So looking at tech, and a very similar story. Now take a look here, 50 RSI, fairly close to 50 RSI. We're right back at 50 RSI here. So that was a pretty major low. That was a pretty major low. Is the low in? Right now we're on that 382 retracement from that swing high and that swing low. This is also our COVID low anchored VWAP. You could also see how we've respected the 21 moving average on the monthly chart. Yes, we did lose it here, put it inside month, broke out there. Again, we dipped below intra-month, but we closed above the 21 here, put in a nice strong month here, and that sent us higher. So right now, we have very similar kind of look here, right? With these bigger pullbacks. They take 4 to 5 months. This one took about 4 months. This one we're on month 6 from the high. So, just looking historically, the low might be coming very soon. When it comes to the Qs, we're sitting right on top of that swing low anchored VWAP from the COVID low. So I think this is a very important level to hold. We only tested it once, which was the first month after COVID. So this is the first time we're testing it since here. So very important that we hold this level. If we could hold this level, and get a close over this level in May, then I think that bodes well for potential, push back higher. But we'll take this 1 month at a time. Next up is IWM. Here's your small caps. Again, this channel going back a bit, but I just wanted to focus on the more recent candles. You could see from that swing high to that swing low, we're right at that 382 retrace, which is also right at the swing low anchored VWAP. We did close below both of those levels, which leads me to believe we might see lower prices here on the small caps. Now, take a look back here, testing the center channel, back here, testing the center channel, back here, testing the center channel. I think it makes a lot of sense over the next couple of months, maybe we do back test this center channel. What I would watch for is a move higher off of that. Next up, we're going to get into some sector ETFs. This is not in any particular order. This is XLV. This is your healthcare. So here are some of your top holdings that comprise XLV. And you can see we've pretty much been trading in somewhat of a range. We broke through 1618 extension from a prior swing high, swing low, and came into the 200% extension. We did break out and then failed immediately. And again, last month, 2 months ago, broke out and then failed immediately this month. So healthcare is still stuck in a little bit of a range, but there have been some names that have been outperforming. I think Johnson & Johnson had a fairly decent April. But yeah, I mean, we're still trading in a range. We might need for this 21 moving average to catch up. Maybe we consolidate for another couple of months before we get that ultimate push higher. But it's looking like it's setting up for a move here. Next up is XLRE. These are your industrials. Again, here's some of your top holdings on the industrials. Here, to me, it looks just pretty much like a bull flag. We got a rejection off the top of that flag here. We came right back and back tested the 21 moving average. We also had a little bit of a fib cluster here around 95.09 to 95.81. That seemed to hold both of these tests here. So I would watch for this level to continue to hold, and maybe we get a push back up to the top of that flag this month. Next up is XLU. These are your utilities. Here's your top holdings. Utilities have looked pretty good. We're grinding, higher in a nice channel here. Weak, into the end of the month, but, still up considerably when you look at relative to the beginning of the year. So I think it's definitely something to keep an eye on. Utilities aren't certainly going anywhere. And, we've had a bunch of squeezes setting up and firing back into a setup and firing back into a setup and now firing again. So we still have a little bit of room, I think, to the upside on the squeeze. Plenty of room on RSI, certainly. You could see we were overbought back here and overbought back here. So we have not even gotten to those overbought conditions. So definitely keep an eye on utilities moving forward. Next up is XLRE. This is kind of your real estate plays. Here are some of your top holdings here. This one's been up and down, right? We had a couple of down months. We had an up month here over that 1272 extension from that swing high to that swing low. Now we're back testing the 1272 extension again. So this one looks like it might want to come back down to the 21 moving average, or possibly back test this broadening formation breakout that we got. Back test breakout right there, went higher. It back tested the breakout there again. It went high, made a lower high. So just keep an eye on the first level. I would watch as a back test again on the top of that broadening formation, and then watch for a potential back test on that black line, which is your 21 EMA. Next up is gold. This monthly chart looks really interesting. You can see we've got pretty big, cup and handle setting up here. We're in the handle portion, and 185.85 seems to be a fairly tough level to break. You can see 3 months rejected here. First month after making that high, rejected there. Now 2 months again rejected on that level. So it tells me that once we break above and close above 185.85 on a monthly level, that could be the signal that this cup is really, cup and handle is really ready to start moving. You could also see we're in a 5-month squeeze right now, with momentum shifting to the upside, shifting up to the zero line. I call this a slingshot squeeze, because once it goes to the positive territory, you can see a little bit here, right? If I were to span this out, you could see like these tick down, then it came back to the zero line, and then it ultimately was positive for a few months and then started to fire, right? And look at the move we got off of that. So that's what I'm really looking for here on gold. I think we still have to be a little patient. We did get into overbought territory here, and you could see that's when we started to pull back. But, where we were here on 50 RSI and where we came here on 50 RSI is considerably higher. And so I think if we hold over this level, we get this TTM squeeze, momentum ticking positive. If we get a monthly fire, we get that close over 185.85, I think that's the time to go long on gold. Next up is jets. These are your airliners. And you can see we're forming a massive wedge back to July of 2019. And so, yeah, I think we're just still setting up. We're going right back into a TTM squeeze here, but we are under 50 RSI, so it is the weaker of the sectors on my name, although they've shown a little bit more relative strength these last 2 months relative to the market, to the overall market. So I would not discount jets just yet. If the states continue to open up, relax COVID restrictions, mass restrictions, then I would expect, airliners to continue to move higher. Next up is XLP. These are your consumer staples. This just, looks really good, right? We've been in a steady uptrend since the COVID lows, money flowing back into staples. I think, if you look at the channel high here, came into it here, I think you could expect that, in the next few months, we would test the top of that channel. So that's what I would be watching for on the XLP. And I think that one was the last sector. So hope you've enjoyed this video. If you do get a moment, please leave me a like, a subscribe if you're not already a subscriber, and drop a comment down below, as I mentioned. And keep an eye out. I do put out a few videos a week. I do some TTM squeeze videos, some inside days, inside weeks, and I'll put out some review videos as well, trade reviews, and also chart updates as well. So hope to catch you in the market next week. I think, again, FOMC is going to be on Wednesday, so there's definitely going to be some noise around that. Looking to see if we get maybe an oversold bounce early in the week, but I think FOMC will give us a little signal if we're going to continue lower, or possibly, if we do get that early week rebound, maybe make a move back higher. But I think it's still time to be a little patient. I don't think the lows are in just yet, but I think we're getting closer. So remain patient, exercise proper risk management, and I will see you on the other side.